Think about waking up with one eye red, sore, and angry at the light. Most of us would reach for drops, call a doctor, and hope it calms down fast. Tarsier Pharma lives in that scary eye inflammation world, and the big question is simple. Is this a real business already, or a big bet on what it might become? Tarsier Pharma is an Israeli drug developer focused on inflammatory eye diseases, the kind that can make vision blurry, painful, and fragile. You probably don't use the company directly. Almost nobody does. But if a doctor ever needs better tools for stubborn eye inflammation, that's the everyday moment Tarsier wants to be part of. Follow the cursor stocks for IPO stories before they trade. The company was founded in 2016 and is led by CEO Daphne Ham-Langford from Zichron Yaakov, Israel. That matters because biotech is a trust story before it's a sales story. Investors are being asked to believe the team can turn lab work into medicine, then turn medicine into a business. What does it actually do? Tarsier develops drug therapies for eye diseases, where inflammation is a core problem. That means it's not selling reading glasses, contacts, or a consumer eye drop brand at the pharmacy. It's trying to create prescription medicine for doctors who treat more serious inflammation inside or around the eye. The reason this problem matters is easy to feel. Eye inflammation can mean pain, redness, floaters, light sensitivity, and blurred vision, and doctors often need to control it quickly. Existing treatments can help, but they can also require careful monitoring, especially when steroids are involved. So the opening in the story is better control with fewer trade-offs. Here's the catch with a company like this. The money engine doesn't look normal yet. A restaurant sells meals today. A software company sells subscriptions today. A biotech like Tarsier usually spends for years first, trying to prove a drug works, get it approved, and only then build sales. Now comes the IPO, the moment a private company starts selling pieces of itself on the stock market. Tarsier is set to list on AMEX on July 9, 2026, under the ticker TARX, the short stock market nickname people use to find it. The deal is pending, so these are planned terms, not a finished closing. The price range is between $8 and $10 per share. Because the deal aims to raise $50 million by selling 5 million shares, the implied expected price is around $10 a share. Shares are tiny ownership pieces of a company, so buyers aren't buying a product. They're buying a slice of the future. About $50 million is the headline raise. For a giant company, that's pocket change. For a small drug developer with no product revenue, it's fuel. Think of it as money to keep the eye drop story alive long enough for trials, approvals, and business building to have a chance. Why go public at all? Usually it's to raise money, give the company more visibility, and create a market where investors can buy and sell shares. For Tarsier, the practical point is funding. If the medicine is still being developed, public investors are helping pay for the long road, from promising science to possible prescriptions. The bull case starts with the need. Eye inflammation isn't a vanity problem. It can threaten daily life because vision touches everything, from driving to reading a phone. If Tarsier can offer doctors a useful new treatment, it could move from being a research story to being part of real medical decisions. The second bull case is timing. Investors often like biotech IPOs before the business looks obvious, because the biggest value jump can come if clinical results improve the odds. That's also what makes it risky. You're not just asking, is the product useful? You're asking, will the evidence be strong enough? The third bull case is focus. Tarsier isn't trying to be everything in healthcare. It's aimed at inflammatory eye disease. A narrow focus can help a small company move faster and tell doctors a clearer story. But focus cuts both ways. If the main program disappoints, there may not be many other engines to fall back on. That sounds powerful. But here's the catch. Drug development breaks hearts. A treatment can make sense in theory, look encouraging early, and still fail later because it doesn't work well enough, isn't safe enough, or can't win approval. For a new investor, that's the biggest reality check hiding behind the exciting medical story. The financial reality is blunt. In its latest full year, Tarsier had no revenue, meaning no money coming in from sales, and it lost about $5.1 million. Profit is what's left after the bills are paid. Here, nothing is left yet. This is cash burn, money going out to keep the company alive and moving. That brings us back to the central question. Is this a real business already, or a big bet on what it might become? Right now, the valuation, the price tag investors put on the whole company, hasn't been set. And with no revenue yet, investors can't lean on normal sales multiples for comfort. Competition is also bigger than one rival's logo. Tarsier has to compete with existing ways doctors calm eye inflammation, including steroid drops, injections, implants, and immune-focused treatments. Doctors don't switch just because a company is new. They switch when evidence, safety, convenience, and cost make the new option worth it. The IPO money scene is worth reading carefully after the final prospectus is in front of you. The current terms show new shares being sold to raise $50 million, but investors should still check insider selling and the lockup, a waiting period when early holders usually can't sell yet. That tells you who is funding the future and who may be waiting to exit. One helpful way to feel the scale. The planned $50 million raise is almost 10 times the latest full-year loss of about $5.1 million. That doesn't mean it automatically lasts 10 years because trial costs can jump. But it shows why the IPO matters. Without fresh capital, the medicine cabinet story is just harder to keep funding. After it lists, watch 3 simple things. First, does Tarsier produce stronger clinical evidence? Second, does spending stay controlled as trials move forward? Third, does the company explain a clear path from science to customers, meaning doctors, patients, and payers? If those pieces don't improve, the IPO story stays mostly hope. So the balanced verdict is this. Tarsier Pharma is a focused eye disease biotech with a real human problem at the center, but not a normal operating business yet. The dream is a better treatment for serious inflammation. The doubt is whether science, approval, funding, and competition all line up before public market patience runs out. If you remember the red, painful eye from the beginning, you now know how to read this IPO. What problem it targets, how far the business has come, what could go right, and what could break. Follow the cursor stocks, and the next listing won't feel so confusing. This video is for information and education only, not financial advice.